for watching another episode of Insightful Principles. In today's content, I really want to talk about Jerome Powell's remarks that he had on March 7th. He actually did a testimonial with the U.S. Senate Banking, Housing, and the Urban Committee. And he kind of just talked about his approach of how he's going to be looking at increasing interest rate hikes. And actually right now, today, on March 8th, as you all are watching this, he's actually talking to the House of the Financial Services Committee, and he's really giving his take on how they're going to have to be a little bit more aggressive than they anticipated when it comes to interest rate hikes, and also just how they're trying to do as best as they can to have a soft landing. But we know with the current environment right now is moving more and more into a hard landing as they start to continue to tighten the economy, and it's mainly because they're trying to get down inflation. So I do want you all to listen a little of what he's saying right now with the House of the Financial Services Committee, and then I'll talk a little bit about what he discussed yesterday when he spoke in front of the U.S. Senate Banking, Housing, and the Urban Affairs Committee.
Joining us today, we appreciate not only your professionalism but your direction in us. Chairman Powell, I know that the Fed considers divergences, and you talked about it as you spoke in your opening statement about consumer price index, personal consumer expenditures, inflation, GDP, and all these things are talked about in your monetary report of March 3, 2023. Thank you.
It would mean that white unemployment would go up to about 0.9, but black unemployment would go up by 2.3%. Does that sound somewhat accurate to you?
Yes.
Can you address the disparity impact with that? However, while disparities in unemployment have largely returned to pre-pandemic levels, there still remain significant disparities in absolute levels of employment across groups like African Americans and Hispanics. So can you address that?
I can. So right now, to your point, African American unemployment is, I think, 5.4%, which is just about as low as it's been since we started tracking it in 1972.
But differential from majority by.
I'm going to say so that's 5.4, whereas the overall is 3.4, and that includes blacks. So that means for whites is well lower than that. What happens is there's a persistent gap between black and white unemployment, and also when unemployment goes up quickly in a recession, it goes up much faster for African Americans. When the economy grows again, it comes down faster. So that's somehow embedded in our economy. We don't really have the best thing we can do is achieve stable prices so that we can have long expansions. And what happens in those long expansions is that the labor market gets tight, sustainably tight, and we have historic lows in unemployment, including for African Americans. We are very well aware of the lags with which monetary policy affects economic activity and inflation. Those are long and variable, and I would stress highly uncertain. There is really no agreement on exactly how long they are, but we know that slowing down the pace of rate hikes this year is a way for us to see more of those effects as they come in.
In December, most Fed officials expected to lift rates this year to between 5 and 5.5%. Is that still your estimated terminal rate? Or does the data suggest that the terminal rate could be higher than 5.5%?
My colleagues and I will write down new forecasts and release them to the public on March 22. But as I mentioned in my testimony, the data we've seen so far this year suggests that the ultimate level of rates will need to be higher. But we still have some more data to come in between now and the meeting. But as of today, it suggests a higher level than that.
So as you can see there, just kind of a little insight on Jerome Powell kind of addressing the House Financial Services Committee, and you can see how he discussed about their mandate is really to have price stability. They want to make sure that they're getting inflation down. They can be able to change interest rates to be able to use some of their tools to kind of help be able to bring more stability into the economy. But wanted to also kind of highlight some of the notable things that Jerome Powell said yesterday when he spoke in front of the U.S. Senate Banking, Housing, and the Urban Affairs Committee. But like I mentioned, he really is talking about that the terminal rate is going to be much higher than expected. And I've talked about before how the terminal rate is really the ceiling rate that the Fed typically doesn't see themselves going past to. At December of 2022, it was discussed that the terminal rate was going to be 5.1%, but with a lot of the economic data coming out now, it's now being predicted or starting to be more priced in that the terminal rate is actually going to move up from 5.50 to 5.75%. And some of the key indicators that Powell is looking at when he's talking about how the economic data is going to help guide our decisions is they are looking at what's called the core personal consumption expenditures. And this is also known as the PCE. And this is when they will look at, the Federal Reserve is looking at where is inflation going long term. And this metric actually excludes food and energy. And the PCE tends to be more of a favorable metric than the consumer price index, which is the CPI, because it doesn't include the frequent changes of increases and decreases for the price of food and energy. Now, for January's PCE, the Fed anticipated that it was going to come out at about 4.71%, but it actually came back in the data as 5.4% for the long-term outlook for inflation. We also have CPI as of January of 2023 was at 6.4% year over year. So the data is showing that we're still well above the Fed's target of 2%. And you can kind of understand why Powell's remarks are much more hawkish, which means more aggressive on their take on how they're going to raise rates. And he actually mentioned during his testimony that restoring price stability will likely require we maintain a restrictive stance of monetary policy for some time. And the historical record cautions strongly against prematurely loosening policy. And they kind of just stated that they're going to continuing to get the job done. You know, they're going to have to continue to stay the course until the work is done. And when Powell is talking about price stability, all he's mentioning is that they want to be able to preserve the purchasing power of the dollar and trying to restore more confidence that people will have when it comes to their money that they're holding. Even though the Fed has stated that this is their goal, the dollar has continued to decrease over time. It has lost a significant amount of its value if you look over the last 20 years. So I think that 2% target that they have, you know, even then, you still have to think about how this is a hidden tax. This is 2% of your wealth that's being taken away. So you have to find ways to be able to invest and being able to get above that target. But also you have to think about where inflation is at. Where inflation is at right now and how to position yourself within your portfolio. And Jeff Booth has been one person that has really talked about how, you know, why do we live in a system that tells us that they have to take away 2% of our money for whatever reasons. You know, inflation is usually used in a way to be able to pay back some of the debts that our government owes. And it's just really unfortunate when you think about really how the system is designed. But also during the hearing, Elizabeth Warren actually challenged Powell and talked about how if they continue to keep raising rates, that it will continue to put a lot of more people out of work. It can also increase the unemployment rate. And Powell pretty much responded and said, you know, would you rather us be walk away from doing our jobs and continue to allow inflation to run high? And I think that goes back to what I said on how he mentioned that they have to take a more restrictive take with their monetary policy, and they don't want to prematurely loosen interest rates, because if they do, inflation could continue to stay where it's at, and that could just create a more frequent problem throughout the economy. So I definitely think that there was a lot of interesting things that were discussed during the hearing, and I think it's important to understand what's going on with our Federal Reserve, because they ultimately have an impact on our monetary supply, and they also have an impact on either tightening the economy or loosening the economy. And a lot of times when interest rates are going up, it does affect other consumer debt when you think about mortgages, auto loans, credit cards. So all of this may impact you as just a consumer. So I think it's important, and you have to pay attention to what the Fed is saying, because it can give you a direction on where the market is going to go. And a lot of times you can be able to get a better understanding of why the market is going up and why it's going down. And I think some of the final things that he really talked about that I think that is also being projected is that now the market is starting to price in a 69% probability of a higher half-point increase at the March meeting. The next Fed meeting is going to be coming up on March 21st to the 22nd, where they're going to talk about what their next round of rates are going to be. It was at first discussed that it was going to be 25 basis points, but now with the most recent economic data, it's been discussed that it could be 50 basis points. So I definitely think it's a lot of interesting things happening in the economy, and it's very intriguing to see what the Fed is doing and what their response is to a lot of the economic data. But I hope this was, a very informative and helpful video for you all. But as always, if you can please continue to rate, leave a review, continue to share this episode, subscribe. Don't forget to hit that notification bell below so you can be notified every week when I drop content. I thank you all so much for watching another episode of Insightful Principles, and take care.